Did you know that India's third quarter GDP growth surpassed expectations? That's right. During the third quarter of the fiscal year 2023 to 24, India experienced a robust economic expansion, with GDP growth clocking in at an impressive 8.4% from October to December. This growth rate was well beyond what most economists had predicted. So, what propelled this economic surge? The answer lies in strong private sector investment and a significant uptick in services spending. The private sector, the engine of India's economy, stepped up its game, injecting much-needed capital into various industries. Meanwhile, consumers, buoyed by improved economic conditions and rising incomes, increased their spending, particularly in the services sector. But the good news doesn't stop there. On the back of this stronger-than-expected performance, analysts have revised their full-year GDP growth estimate for fiscal year 24 upwards to 7.6%. That's a significant bump up from previous estimates. Furthermore, economists are now more optimistic about the fiscal year 25, with UBS, a global financial services company, revising its forecast up to 7%. This reflects a growing confidence in the strength and resilience of the Indian economy. One of the key implications of this economic upswing is a potential shift in the Reserve Bank of India's policy stance. Analysts are now anticipating a move to a neutral stance in June, with a possible shallow rate cut cycle in the fiscal year 25. This would be a strategic move to support continued economic growth and maintain stability in the financial markets. Moreover, the Indian economy is entering a favorable phase, with a contained current account deficit and declining inflation. These are positive signs that point towards a sustainable growth trajectory and a more stable economic environment. So what does all this mean? It means that the Indian economy is on an upward trajectory, underpinned by strong private sector investment, increased consumer spending, and favorable macroeconomic conditions. It also suggests that the economy is likely to continue its growth momentum in the coming years, supported by prudent monetary policy and a conducive economic environment. In conclusion, India's third quarter GDP growth has not only surpassed expectations, but has also prompted upward revisions for future growth estimates. The combination of strong private sector investment and increased services spending has been instrumental in this growth. The economy is now entering a favorable phase, marked by a contained current account deficit and declining inflation. The Reserve Bank of India is expected to adjust its policy stance accordingly to support this positive growth trajectory. This is indeed a significant development, one that underscores the dynamism and resilience of the Indian economy. It is a testament to the fact that despite challenges, India continues to march forward, charting its own path of economic growth and development.